So I'm going to share a quick story with you about why aggressive tax planning might not be in your favor. So about 2 years ago, I was working on a file for a brand new client at the firm that I was at. This individual his prior accountant had just retired, and he was a little concerned that there was some issues going on with his file. So we got it and started working on it. What we discovered was this individual had 3 companies with different year ends. I don't recall the exact year ends, but for example, let's assume that they were November, May, and August. So what happened is when the August year end came and that business had taxable income, the accountant would record a management fee paid by the profitable company to the company with the next year end for managing inventory and supplies and tools and helping with bookkeeping. So it had made a profit of, let's assume, $100,000, and it paid a fee of $100,000 to this next company. So what happened? Well, the company with the August year end has no income. No taxes are paid, nothing to worry about. The November year end comes up. That company too, it has its own profit of, let's say, $50,000, but it now also has a management fee income of $100,000. So its profit jumps up to $150,000. To offset this and delay the taxes, another management fee of $150,000 was declared payable to company 3. You can see where this is going. Company 2 has no taxes, nothing to worry about. Company 3 year end comes up, it's got $100,000 of profit plus the $150,000 management fee. That's $250,000. And this would occur year after year after year. This individual paid very low taxes. But by the time we got a hold of the business, this deferred tax management fee scheme had accumulated to well over $800,000. Now, what happened? Well, we refused to keep doing it. We couldn't. It just didn't sit right with us, and we had to end it right then and there. Because the income was over $500,000, the business lost access to the small business corporate tax rate. So its tax rate jumped up. Had to pay even more taxes. We had to pay out eligible dividends from that amount. Eligible dividends are a special type of dividend paid by larger companies, but they are more expensive to file. So we had to do that. And then he had a lot of personal income that hit him as well. He had to cash out life insurance policies as well as dip into his retirement savings just to pay the taxes on this. It was a huge mess. Why am I sharing this? Well, I want you to realize that there can be aggressive tax strategies. There are ways to pay no taxes temporarily. It will always come back. And the problem is that by letting things accumulate and getting this big, huge clump of taxes hit you one year, it's going to really negatively impact you. The way to pay the least amount of taxes over the course of your life is to have every single year be the exact same amount of income. So if your income starts low and gets high and then drops into retirement, you would pay less tax if you could have taken that top income and put it earlier and later. Now, for example, that's how RRSPs help. As your income goes up, the RRSP reduces your income, and then when you retire, it keeps your income a little higher. When it comes to taxes, that's really the way to pay the least, is to have the same amount of income. It's those big, huge jump years that cause the biggest issue. And if you do something aggressive, like pushing income into different companies year after year, you're going to have one of those big spikes that will result in that high rate tax that will really, really hurt you in the end. So, I know that there's a desire to pay less tax. I know that that's a strong desire by many individuals, but be smart with it. Be wise with it. Paying tax is not a sign that you are doing bad. Paying tax is a sign that your business is making money, and it should make you happy. Now, there are legitimate ways to reduce taxes, such as making sure that you report all of your expenses, which is done by making sure that you have clean records. There are other ways to reduce taxes, such as incorporating a business that's not incorporated. That's a complicated process, but it can help reduce your tax bill, so it's something that you'll want to discuss with an advisor. There are other ways as well, such as through capital gains if you invest in real estate. But even then, that is restricted and there's certain rules you have to follow. So in all things, realize that paying taxes is not a negative thing in and of itself. It means that you're making money. It's a good thing. Paying taxes is also how we're able to afford this wonderful country that we live in. Now, I won't get into the politics of it. There are pushes to reduce taxes and simplify taxes, and I do understand all of that. I just want to address the issue as a whole, that if you become too aggressive, then it will cause issues.